Good morning, Forex traders. Welcome to Admiral Markets. Welcome to the trading room. We're going to take a look at the Forex charts, of course, today, and specifically breakout strategies, again, on this Wednesday, the 4th of December. But as always, the risk disclaimer explaining that trading for exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So the breakouts, well, primarily I trade breakouts in the direction of the trend. So as always, we'll be taking a look at defining the trend, looking for opportunities. We're going to be checking any filters that could block the trade from materializing, such as divergence or any major support or resistances, tops, bottoms that could stop a breakout trade from becoming impulsive, because that's basically when you trade breakouts, you want to catch a good impulsive part. And once we have that in play, when we have a trend, we have a good pullback, we can then take a look at establishing a trigger and entry methodology or method. So breakouts can be traded in various ways. I will most likely be focusing on moving averages and trend lines for that. But I mean, there are different ways, maybe even Bollinger Bands, for example, but I'm not using those. Primarily these two, trend lines and moving averages. Goody good. Well, yesterday was a bit annoying for myself and the EJ, because the 140 level was indeed a big barrier, because it broke through that 1 pip and came smashing down, unfortunately. So luckily I did take it with a very smaller risk, because I knew that at 140 could be a problem, and unfortunately it was. So that's a bit of a pity, but what can you do? That's the risk with breakouts. Breakouts, you really have to you can filter out some, of course, but you're going to have some losses, definitely. That's why you need to compensate those losses with good rewards. That's why I recommend trail stopping it with 5 pips, a 50-minute fractal, to let your winners run. And then sometimes you will catch a 3-to-1, a 5-to-1, and that will more than compensate the losses. Last week we had the dollar, and I'm not sure how much R2R that was, but I think at least, I hope close to 2-to-1, for example. I'm not sure by heart though. If you're new in here, we have more live webinars, in fact. Besides this one, we have Toronto talking tonight at 5 p.m. GMT about money management, as you can see here. Tomorrow we have another live trading lab, intraday trading, and then Toronto and I are talking about need versus greed in the evening. All right, so this is a weekly cycle of these 4 things basically at Admiral Markets. We're looking now at the live trading lab, and there are other types of webinars as well. All right, with that said, let's go to the charts. As usual, we'll start with the euro dollar. I just need to open my drawing tool. I forgot about that. 1 second. So we'll take a look at the euro yen. Maybe some were annoyed about that trade, but you know, it's always a part of the game. You have some losses, some winners. Just make sure that the winners are bigger than the losses. That's what it boils down to, basically. And it's not as simple as it sounds, but that is the goal. Euro dollar. Daily charts. Well, you know, I think that I was looking at the euro dollar this morning from a very big perspective, and I had all the time the mental framework where this is downside and we're moving up correctively, which is still true. I mean, this is still a pretty decent move down, and this is still corrective, and we could get the fall to 130, 140 and maybe lower. But if you look at it from a weekly perspective, it is even possible to see something like this, a channel like that, And maybe with a pretty good middle line here, respected. So maybe this was just a retracement for more upside. So I'm a bit more cautious about that scenario. I think I'll even change the other wave structure that I have to be a bit more cautious, because I still have this as a 5-wave down and up. So obviously a breakout trade would be below this channel, but that won't happen today probably. But if it does, we could see the fall to 131.50, 129.50, 127.50. But otherwise, I should maybe be a bit more careful and, well, not careful, but also be more open to the potential bullish side. Although I was saying mentally I was still more bearish. A break above the green would be a breakout trade to the upside up to 137.15. So I think those are the lines in the sand. We could have a bearish breakout if we break above this, below this smaller blue line. So I have two blue lines basically: this big weekly trend line and this smaller 4-hour trend line. So down to the 4-hour chart, and we can see that a break below could see a fall to test the weekly channel again. And then do we break or bounce? So these options look the most possible from a 4-hour perspective, I would say. A break above the green trend line, we have a breakout trade up to the 78.6 Fibonacci retracement level at 137.15. Still, that's the same as yesterday, in fact, because the upside yesterday, we were talking about the fact that we'll take a look at the 1-hour chart, but we were saying that, or I was saying that the 1-hour chart is starting to look bullish, and it did move up a few pips to retest that top. So that was yesterday, but we didn't break the top, so there was no breakout trade there. Now moving down, back into no man's land. So break below the trend line, we have the potential to fall, to retest the blue circle and channel. Either we bounce or we continue and break. So those are the scenarios, I would say. Right there. That's how I would summarize it. The how do you call this? The path of least resistance would look something like this with these choices. So I'm going to take the drawings away. I'll give you just a few seconds for those of you who are multitasking. I'll keep it on just for another 10 seconds so you can take a look. Otherwise, I'll move on. Alrighty, good. So you can see the green arrow, red arrow, and the potential bounces. Also, the 786, of course, could be the resistance where we can see some downside. So something like that. So those are the primary breakout trades I will be looking for. The break above green would be with the trend. The break below blue trend channel would be still a bit counter trend in a way, although we do have this momentum really supporting a break to the downside as well. So down to the 1-hour chart now. And yesterday we were looking at the euro dollar. Let me take a look. Oh yeah, after this one, where I have the green dot there, that candle, that was a bullish candle. And I said I want to see the bullish candle after that, or confirmation. We did get that. So if we zoom then into the 15, you can see we did get that small bull flag that I was talking about. And then the break after that, we did get the continuation, as I was saying. Wait for confirmation, wait for the small bull flag, and we'll get that follow through on the euro dollar to the upside because it was looking bullish. The price action on the 1-hour chart was bullish. So that lasted, of course, to London Open, and then the currency went to sleep, as we should expect with the euro and pound dollar, of course, specifically. And at the moment, personally, we can see bearish price action at the moment. Euro dollar does not make the same spikes, in my opinion, as the pound dollar. So I think it's a bit more reliable currency to trade, let's say, the first few hours of the trading day of the European trading session, whereas the pound dollar is always a bit more, I would say, tougher to read because of its ups and downs, its volatile ups and downs. Typically, if it's bearish, it will stay bearish throughout the day, just like yesterday. If it was began bullish, it will stay bullish. In this case, I'm not that certain as yesterday because of the uptrend here, because of the spiky environment as well. Plus, we're pretty close to the support line. We could fall down here. Also, the moving averages are still flat, whereas yesterday they started to point up. I know these are small differences, but they do matter for me. Whereas I was bearish definitely here. The price action that pushed above the moving averages and changed the angle altered that balance for me. In this case, it's still too early for me to say that I would be for sure bearish, although we are seeing definitely price action hints at that. I would still want to see a bit more confirmation, just like I said yesterday, in fact, as well, for the bullishness. So we'll go back to the euro dollar soon, maybe at the top of this hour and next hour, to see how this is unfolding with the 1 hour chart. But from the longer term perspective, a break above green and a break below blue. The only thing what we're trying to establish, let's say with our current analysis, is what it can do between those lines, if there are any pips that are desirable or are able to catch between those green and blue line. And there's no rush. If there's nothing good to find within those two lines, then it's nothing wrong to sit on the sidelines until it does break one way or the other. There's nothing wrong with that either, because this could turn into a triangle as well. We could see maybe a small fall still, bounce up, small fall, and that could happen as well. So let's see how this candle finishes in 2 minutes. In the meantime, Wayfo, good morning. It said that, let's see, caught the move yesterday. Ah, great. That's great. Good job. Good trading. Very happy about that. And is asking, what are the potential downside targets? The blue channel lines and the longer term trend lines? Yes. At the moment, I wouldn't be targeting, if we're trading this intraday, we have to realize definitely that, totally agree that when approaching this bottom, it could definitely provide support for a move back up. So there is not much space at the moment for downside as well. How we could break, I'm not saying, but some bounds would seem likely to me before we break, if we break. Kalen is asking, but we'll keep an eye on this as it develops, is asking how would an entry be at 135.62, a TP at stop loss at 135.40, and TP 136.10. Not somehow a big fan of that idea. Sorry, Kalen, don't want to, but it would. I don't like the idea of buying against this momentum, this bearish momentum, this bearish price action. It could be a fib level that you're looking at. Oh, sorry, I deleted my euro dollar. 1 second. It could be a fib level that you're looking at. but I'm not sure how valid fibs are in this environment. Let me take a look at the 4-hour chart. Well, it's not. It could be decent, in fact, because if you look at it from this perspective, it is an uptrend channel, and buying on dips in uptrend channel so close to the bottom of the trend channel, I stand corrected, should in theory always, in the long run, give you a profit. Now, I'm not sure if in this case it could always be a loss because it might break the channel, but then that's just tough luck. So in that regard, that idea makes sense. The only thing that concerns me is the bearish price action, and maybe instead of entry order, waiting for some price action confirmation could be better, for example, and less risky. That's the only thing that crosses my mind. Also, the other thing that crosses my mind is if you have a stop loss at 135.40, it's still above support. I prefer to have stop loss below support, personally. Yes, in the meantime, the price would be breaking through the uptrend channel, but the horizontal support could still provide support. So that's what crosses my mind. Kaylin is saying there's bearish divergence forming in 4-hour. Let's see. Yeah, it's difficult to say. I don't see it here, bearish divergence. Maybe the 1-hour. 1-hour there was divergence here, but price already responded to that and corrected. This in fact is looking like an impulse, and the oscillator is pretty impulsive, but the downside was also impulsive. So that's one of the reasons why maybe waiting for a breakout could be preferred. This is going back to the zero line though, so it could be a bouncing spot. It could be definitely a bouncing spot, but maybe waiting for a lower bouncing spot at the trend line could make sense as well. So I would still wait. I think it's better to take a look at how price is responding. It's definitely a bit of a grayish zone, mixed signals at the moment. So if it's a bit mixed, nothing wrong with waiting. You never can lose anything with waiting, that's for sure. So doing that and waiting just an hour or two more would probably make sense. Let's take a look at what kind of direction we can see. I mean, there are arguments to say that this is a bouncing spot, higher, lower, stop loss lower, maybe. There are arguments to say that this is actually making already lower highs, for example. So we are in a bit of a wedge, although there is that uptrend power. If you do take it, then I would rather have the stop loss lower and aim for a higher target. That's what I would prefer. Instead of 136.10, I would then prefer to aim for 137 and put the stop loss lower, personally. So let's go back to the euro dollar when we've looked through some others. 1 second, folks. I deleted my euro dollar, so I try to get it back to the original spot. Okay, good. Pound. Well, the pound didn't break. That was Monday's high, wasn't it? Let me check on the daily chart. We identified a strong pin, or there was a pin bar without doubt. The close was bearish, and there was a big wick on top after a significant run up. So that was a bearish, potential bearish, or high likelihood bearish price action signal. And the retracement of the wick was a potential short as a reversal trade. Also, any upside would definitely have troubles probably with breaking this top, and it did. It did challenge it sturdily, but didn't break it, and we've moved down ever since. So I think that the likelihood of probably the currency moving down now to retest the broken resistances at around 162.50 is pretty high now. I wouldn't necessarily say that this daily fib is, yeah, we could use the daily fib. The 382, for example, could be a bouncing spot, but if we also move down to the 4-hour chart, where do we have those resistances that were broken at 162.50 and 163? So let me clean up the chart for you a bit. I'm not sure if everyone was in yesterday's trading room. There we went, I don't want to repeat everything we've discussed there necessarily, but if you were not, maybe let me know. Otherwise, I'll just quickly change this. Good. So if we put fibs on this upside on the 4-hour chart, because that's a daily fib, right? Back to the daily chart. The 382 could be the bouncing spot because the 382 is equal to the broken resistances approximately. Now that we have these set of daily candles, there could be the likelihood of that correction back to the resistance that now acts as support, and we go up to 160, challenge 167. I do think that that is the most likely scenario at the moment. The downside, however, is correction, and the most interesting would be a bounce at that level for the upside. Now let's put the fibs on 44-hour chart, on the 4-hour chart. You can see 382 bounce, minus 618 target. So I'm going to move the fib from basically from swing high to swing low, from retracement to target, from retracement to target. And if we do that, you can see we hit the 382, went to target. So if we do the new fib on that, on the 4-hour fib would be this one, from here to there. That's the 4-hour fib. And the 382, the 50, and the 618, all of them could be potential bouncing spots. The 38.2 is at 163.25. The 50 is at 162.88. And the 61.8 is at 162.50. The likelihood of that happening is pretty decent, I think. It looks like a corrective price action here like that. And an upside. So we don't have any breakout trades at the moment on the pound dollar. We do on the euro. The pound dollar we would probably correct lower, then bounce, then move down, and then probably break above that green line eventually. So something like that is most likely. So we then look at the 1-hour chart. We're having some downside here in the 1-hour world. You can see small bear flag and break to the downside. So the pound dollar is looking bearish at the moment, but price is still above the moving averages, so this downside is a retracement. But there might be a counter trend breakout here. So back to the 1 hour chart. Looks like a good breakout candle here. So the pound dollar could be bearish. I would still want to see a slight pause on the 50-minute world and probably hook back. And maybe the continuation below that fractal would be the best way to trade it. But mind you, it is a reversal breakout with emphasis on that. Okay, so I would definitely be a bit more cautious with that. But it is a potential. I would definitely want to wait for a 50-minute fractal, hook back and continue before touching that at minimal, if at all. Because as I said, it's counter trend, and we can expect probably the best, safest is to wait for bounces at those 4-hour fibs for more upside. Okay, so what we could have today, we could see a reversal trades to those fibs. So that's what I think on the, that's my analysis on the pound. Let's see, we got, yes, definitely we'll take a look at the AUD USD. We can take a look at the AUD New Zealand too, no problem. And the coloring is difficult. I think this is actually black, but it looks like dark green because of this green indeed. I know what you mean, AG. The two green ones, let me write that down for you. All right, let's go to the Aussie. Yeah, the Aussie, yesterday we were saying, can it go back up to the 38.2 to 56.18? It didn't have enough power. And it was a 50-51 because sometimes indeed this resistance itself cannot be broken. And that's what happened yesterday. Right here where I have the green circle, it just didn't have enough power and punch to break out or break through that resistance to retrace deeper. That sometimes can happen, and it was actually the spot for downside continuation. Yesterday, of course, we were looking at the AUD right here and saying there is a potential to reverse a bit higher after this and then find resistance again. And that level was here indeed. Not higher as I was hoping for, but I knew that that was possible. 1 hour chart, you can see the 50-minute world had a good breakout like this if you use this trend line. Like that. That was a good breakout. At the moment, though, the breakouts have all occurred, in fact. There was another breakout, an add-on earlier, let's see, right in here when we broke this small correction. It was a very small correction, but still. At the 90.56, that's doing pretty well. But that has already happened. So those breakout trades are behind us. That's the unfortunate thing. If you're trading by yourself and you're just not behind the computer, then sometimes these breakout trades happen at times that we're not there. And that's sometimes the advantage of trading maybe in a small team. But you need to trust each other, that you can monitor certain breakouts together. But yeah, it does require trust, of course, to trade that together. But you know, if you're trading breakouts, then sometimes you'll miss it. There's nothing we can do about it, and that's what happened with the AUD here. how far can this go? $89.50 is the minus 272 target. Then $88.50 is the bottom. So there's definitely some space to fall here. Not saying that there cannot be any additional breakout trades, but we would need to see some kind of chart pattern here, at least a 50-minute bear flag, sorry, for me to get interested again, personally. And the reason is that at the moment, when price is so much below the moving averages, the only safe stop loss is all the way here, in fact. And what is the target? It's, it's 89.50 at the moment. So that R2R doesn't add up, really. So I'd rather, now in this case, let it go however far it wants to go, and want to see at least a 50-minute bear flag, or maybe even a 1-hour correction, either one of the two. Once you get used to, for those of you who are wondering, why not trade it now? And the answer is, once you get used to trading breakouts and taking it at the exact break, you have no appetite to jump in when the currencies already has moved a substantial distance away from that breakout level. It just becomes less appealing. I would have no interest in that. But you understand, if in case you are doubting or wondering, you will understand once you do that more often yourself. Oh, WeFlow took it at 91.20. That's great. 91.20 is a very, very nice level. 91.20. Very nice. Perfect. Especially, yeah, that was great. Especially if you took it here on the break, but even if you took it here, good job. Great job. Let's see, the TPs. 88. Yeah, I see space until 89.50, but let me double check with this fib. Yeah, there's what, minus 618 at 89.90 potential. Sorry for all these fibs. Let me get rid of some of them so that the chart becomes more visible. I want to see what the best fib is for this 1-hour chart, sorry. Yeah, 89.80, if you look at the 1-hour world, could be 89.90, 89.80 could be a bouncing spot. Although we know that the larger targets are lower, so I wouldn't be surprised if this is just maybe some bear flag, and then we see a fall down to 89.50, for example. Already. We go down to the 15, and we'll take a look at dollar CAD and dollar yen, indeed. Caitlin, your idea is short at 90.20 with a stop loss 90.25. That would be very risky, because the stop loss is basically, yeah. Or you're using this 1 minute fractal. It's of course a very tight fractal. And that's heavily exposed to some danger there. Although even the 1 minute world wouldn't do too bad, you do see some spikes above 1 minute fractals. So yeah, probably. I mean, if you look at the 1 minute band here, maybe waiting for at least to move back to that band, waiting for the next 1 minute breakout could make sense. But looking at the oscillator, we see every time the oscillator on this 1 minute chart went back to the zero line after an impulse. So impulse, correction, impulse, correction, impulse. So it looks like we would have a fair chance of making a correction still before we get the next fall, if you want to scalp this odd USD, because that's indeed the only thing remaining. Once we had the breakout on the 50-minute world and the second breakout on the 15, all that remains is indeed the 1 minute chart at the moment, and scalping, because the currency has already moved so much that there's only a few pips, 30 pips left to the 89.90, and we could probably only see a bit of correction down to the back to the 1 hour. Oh, let me get rid of these fibs again. Could probably only see a bit of correction before we fall again. So that would be the only way. Let's take a look at dollar yen. Dollar yen has had a engulfing bearish candle. That's right at the resistance of 103.70. And it doesn't surprise me, because it happens quite often, of course, that when you get a breakout, where does the breakout go to? It challenges the next resistance, in this case the top. And usually we don't break that top in one go, we make a retracement before we break. And usually it would go something like this. Break. So that doesn't surprise me. So some correction, maybe back to this support right in here, for example, which is a bit of a supply and demand zone. Maybe not really, but kind of looked like it a bit right in here. Could be a logical bouncing spot. That is a support, and we know from the fibs, what we did yesterday, is that it's a 618 as well. That's a 4-hour fib. 618 is 101. 50 fib is 101.50. 38.2 is 102. All those levels could be the bouncing spot for more upside and a break of the daily top. Once we break the daily top, we could have grand breakout trades, as the weekly chart would be back in an uptrend, and we could see this dollar yen move up to 110, maybe 115, 120, 125 even. So that would be very, very interesting. Alrighty. So, but until then, here too, we're waiting for a potential bounce at fibs, but what remains is a potential downside to those fibs as a retracement. I'm not interested in trading that downside. Definitely not on the dollar yen, personally. To me, this is a breakout, only waiting for the pullback and continue until I really get good confirmation, good signals that there's a bigger reversal going on here. Other than that, I would be very leery of taking any shorts and prefer to wait for longs at fibs. This is the 4-hour chart. And yesterday's sell-off was a pretty sturdy one here on the 4-hour. You can see on the 1-hour chart as well. pretty sturdy, pretty fast, which leads me to believe that any upside probably will not see much continuation, and I wouldn't be surprised to see a correction down to the 50 where we could bounce. But we have to be careful because that correction might not happen. We did go to 38.2 already, in fact. See that? So we also have to think about the scenario if we just continue and break, and this was all the retracement. In that case, I want to look at the 1 hour world and see a good turn of this moving averages at least. Doesn't seem to be at the moment though. Went to the 61.8. So it will be very interesting and curious to see if this is 61.8 fib is indeed the resistance to move down to 101, 101.50, either of the two. Or if we push above the 618, we're probably breaking out again back to the upside with some small pauses at these fibs. So that will be interesting to keep an eye on that as well, break or bounce spot. If we do break above this level, the moving averages will be pointed to the upside, and there could be some continuation like based on that support. So we'll talk about the dollar yen more within this hour or at the end of the hour. Let's check those candles again. Dollar CAD. Dollar CAD breaking to the upside. Not sure what we said yesterday. I think don't remember exactly. Doesn't matter. It moved up a bit, but choppily, corrected again, but now breaking very impulsively to the upside here. So that's a breakout that has already occurred and is behind us. There was a potential to break out, take a breakout here, or even here. Now this currency is on its way. So what would that be for the long term if anyone is in that trade? Let's take a look at the targets. Maybe we can start with this 4-hour chart. Sorry, something is wrong with these fibs. 1 second. Huh. Every time I want to move them, they get duplicated, which is funny. Yeah, that's weird. Does anyone know the answer to that? Why that happens? Strange. Huh. I'll try that. Control U. Yeah. Ah, that's the solution. Thank you, Patrick. That's great. So we just hit the minus 618 on the 4-hour world, which means I'll put the fib from here to here in this case, and we could see that that could be a potential resistance. Then again, we are breaking pretty impulsively at the moment. So well, anyhow, for me, there's nothing nothing here. Let me take a look to trade, but let me take a look at the targets on the daily. Yeah. 1 second, let me just figure this out. Here too, we just hit a minus 618. I don't know. To me, there seem to be a lot of targets and also still resistance here. So I don't want to seem skeptical, but I don't know. To me, there's not much space somehow. There's a trend line here. This entire dollar CAD doesn't really inspire me that much somehow. So yeah, I don't see much space on the upside still. Until we probably get some retracement. Sorry, I don't want to bore you here with all these fibs. Yeah, I think that indeed the 160.90, 107, they all seem to be pretty big resistance. So I would be careful. Anyhow, I missed the breakout trade, and now at the moment, I don't see anything. From a bigger perspective, though, I guess that this is breaking to the upside. I would just want to see a bit of a retrace. If we do get a bit of a retrace, then there could be space to the next resistance at 108.50 eventually. But at the moment, wouldn't be too interested at that. So sorry for that delay in I was trying to see all the fibs on all time frames to see if there was some space, but not to me at least at the moment. Alrighty. Let's take a look at, well, what do you think? I don't know if there's any preference. Maybe you can take a look at pound yen and euro yen and pound odd and euro odd. Here on this 1 hour chart, there's really no direction at all. It's just flat. That looks like a range environment at the moment. Of course, we had a massive 1,000 pip up move and a pretty aggressive retracement, which is bound to happen at one point in time. So one more fall back to the moving averages, back to this horizontal support wouldn't surprise me. That would fit, of course, also with our pound dollar correction and dollar yen correction that could be expected. So for the pound yen to make one more downside correction after such a move up, plus the dollar yen pound dollar analysis, wouldn't seem that strange. This is a pretty big impulse in one go, and the 61.8 being a resistance for a down move back to the minus 2.7 at 166.80, for example, wouldn't be a far stretch to think of. Mind you, that is a counter trend trade setup. So, but would seem would seem logical at that point in time. And we'll be back to the long-term moving average once we do that. And we could then maybe see a bounce again. Well, that would depend on the higher time frames. We need the 4 hour chart for that. We can see if we look at the 4 hour chart that, sorry for all these fibs, let me clean up it. Let me just take everything off. It must be annoying to watch this. There, that's better. You can see 4 hour chart, price has been above the moving averages for very long. It was great trending trading. So any move back to those moving averages, we should expect support. The oscillator is almost back to the zero line. So if it does move down, 166.90 would be the support area I would expect. 166.80 is the target. All right. So we can zoom into that correction, but I think the most important is not to miss maybe the bounce to the upside in a way. 15-minute world, we can see that the, how do you call it, the reversal breakout could happen when we break below this 15-minute fractal. And that is then starting to look like a bear flag. Downside, bear flag, up, downside. But that downside, once again, is a counter trend. Let's take a look at the odd New Zealand, indeed. Sorry about that, wave, I forgot about that one. But before I do that, Gary's asking about stop losses, struggling where to put them with the breakouts. If the previous low is used, gives a poor R2R, yeah, I think that this is one of probably the most difficult things, Gary. So don't get discouraged if it's a tough topic, because it is. So there's nothing. That's definitely normal. Don't worry about that. What I do, it all depends in what the particular situation the currency is in. If it's close to the top and it's breaking or bottom, I do tend to use a bit looser stop loss, because breaks of tops and bottoms don't go smoothly normally, and there's a bit more volatility. If you then use a very tight stop loss, with tight, I mean the stop loss below or above the 50-minute, the same time frame as your breakout chart. So if you're using a 50-minute chart for your breakouts, a tight stop loss would be to use the very closest fractal for your stop loss. That's a tight one. Now, I'm not sure if you use that because you use previous lows anyhow. That would be my preference if we're close to breaking out to a top or bottom. If we're a bit further away from a top or bottom, then I wouldn't use the previous low, but I would use the tight stop loss, and I would use the 50-minute world. So, for example, the odd USD, let's take a look at that. In my case, when I take this breakout right in here, below this 50-minute fractal, I would use the stop loss above here. Or, if you want a bit more confirmation, then the 50-minute fractal break of this 50-minute fractal break, I would put the stop loss not above the 50-minute fractal in this case. Why? Because it's too far from the moving averages. Only if the fractal were close to the moving averages. But I would put the fractal stop loss around here with the breakout. And enter here. So, and not all the way here indeed. But you do have to know when to do it. Indeed, it's when it's a trending situation like this, and the moving averages are pointed to the downside very nicely. I would use that this band as a potential stop loss, or the 15 fractal if it's within the band. And then I would trail stop the 50-minute fractals by 5 pips. So my stop loss is still here with this breakout trade, and waiting for the next 50-minute fractal to hide my stop loss behind. The average R2R, well, let me get those statistics. About with this rule, it's about 35% are winners, 20% are break-evens, and 45% are losses. But the wins are definitely bigger than the losses. I'm not sure if I can find that. I have those statistics in various Excel documents. I would have to group that all together, in fact, to make it a better answer. But that would take some calculation. 1 second. Um, mm, mm, mm. I'm almost there. Just give me a second. Yeah, it's indeed. It's just a bit more than 2-to-1 indeed. But I have to admit, it's not all my results. I just picked one Excel sheet. I don't have it all grouped together, which is my plan to do it sometime soon. So, but from the selected data that I've been looking at, it was about just a tad more than 2-to-1 indeed. So, and the break-evens are anything between a minus a quarter R2R and plus a quarter R2R. Those are counted as break-evens. Anything more than a quarter is a win, and anything less than a quarter is a loss. Alrighty, so sorry for that delay, but I was curious myself, and I have to. That's on my list as well too, is to get all those tasks together. In fact, alrighty. Yeah, no problem, Gary, for sure. Waitful is asking about Atr stops. I think they make a lot of sense. It's something that I've never actually looked into or used, but from a theoretical point of view, I would think it makes a lot of sense, in fact. Never really focused on that, though, so couldn't say any practical tips or guidance on that. Then there's a question, what is the dash red line? Yeah, that's a 12 EMA close, 12 EMA close. And Kaylin is asking, the confluence of the crossover point of a 38 or 61.8 fib and trend line. Confluence of the. I'm not sure what you mean with that, Kaylin. Can you put the reference again? I'm not sure what we were talking about at that point in time. Oh, for the stop loss. You can use multiple things for confluence. Definitely, you could use indeed a trend line or fib or multiple fibs to help tighten that stop loss, because sometimes indeed the entire swing high, swing low from a particular time frame would eat away too much profit. Of course, we are exposing ourselves to more risk logically, but if tested enough, and yeah, if tested enough, then basically it does make sense, definitely. Alrighty. Let me take a look at the odd New Zealand now. Odd New Zealand is actually a very interesting case of a trend, because you can see strong move down, a bit of correction, but then continuation here. And look at the moving averages here. You can see this band is very, very strong. Nice angle. So that would be good breakout trading. Not trend lines, because we don't have any trend lines here. It's just one move. But on the 50-minute chart, though, we can see that even if there are some trend lines potential, but moreover is just that these 50-minute fractal breaks, in fact, are nice breaks. We had one here. Let's start from the top. We had one here and here. Let's take a look at those. This one with the first red line probably got stopped out early, though. No. 5 pips survived this. Survived this pullback as well. Would have gotten stopped out here, the blue line. That's the first breakout trade. Then the second would be here. Would have gotten stopped out here. Again, entry here. Would have gotten stopped out here. And again, there was a recent entry here. So one win, two wins, one small loss. One small win, one small loss, one win. And this one is already at break even. Or actually a bit more, because if the entry is here, the stop loss would now be 5 pips above this level. If we zoom into that. Well, we don't have a fractal here. There is a fractal, but we need this candle to close to have a confirmed fractal. Once that is confirmed, though, in 12 minutes from now, the breakout trade from here would be able to move the stop loss to 5 pips above here. That's my rule. So, but anyhow, is there an entry possibility for this downtrend? Let's take a look. This is really breaking into uncharted waters. The next support level on the monthly is all the way at 106. There was a substantial up and down here, but now we are breaking definitely to the downside. We had already a couple of weeks down, and we're getting the continuation now. So I guess the only thing to look at, because support is so far away, 106, the only thing we can look at is potential targets. Let me start with I don't want to go through maybe the entire process of all the time frames to look at all the targets. That would be maybe a bit too boring, but let me just look at the major ones at the weekly, and then I'll zoom into the 1 hour right away. All right, so that is the most current fib, 23.6, which is a very shallow fib, minus 272 at 107.80. So we do have some space there. 107.80 is still far away, so that looks good. So let's zoom in now and see if we have something on the 4 hour, for example. Very nice breakout trade here on the 4 hour. But we've moved already a decent amount away from the moving averages. Every time we move away, we hook back, we hook back, we hook back, we hook back, we hook back eventually. So we are a bit overextended maybe on the 4 hour chart, although we could still fall a few pips, I'm not saying. 1 hour chart, yeah, it's, let me put a fib on this one. The thing is that we've moved quite a while, so there's no guarantee that we will necessarily continue with that. Let's see, minus 272 is at 110, which is a psychological round number as well. We could get a bounce there, maybe back to 110.80, which should be a resistance because we'll be challenging this top again and also moving back to the moving averages and back to the 38.2. So if anything, that could be the most, I would say, the path of least resistance while looking at this 1 hour chart. So I don't think trading it here makes sense. We would need this to probably make a bounce, a decent bounce back, and then wait for the retracement and take it down again. So that's my view on the Odd New Zealand. Alrighty. How about that Euro Odd? The Odd is weakening against the dollar. It is also against the euro. And that was nice breakout trading as well. I didn't catch this one, but that happened a bit too early for me, or late, depending how you look at it. Pretty interesting. Nice triangle. Good break. It's a very nice impulsive break. Entry just above the 50-minute fractal. Stop loss just below here. And would be now chill stopping these fractals. So already locking in profit. So that's good. At the moment, though, we are breaking this high as well. And this was a very strong AO reading. So we already knew that the break of this high was a pretty decent chance that it will happen. So I think any hook back to the band, we might see a decent chance of still one more move up. It's a strong trend. We take a look at this 15-minute world. It's a very strong impulse as well on the 15. In fact, we are getting at the minus 272 on the 15-minute chart. So we might see a bit of a retrace. Now a bull flag would be wonderful, a small bull flag. This AO is very strong. I think after the bull flag, we could see a continuation of this euro out to the upside. We've broken above the 150. So maybe we can use 150 now as a support level to go upside. So either I would say a move back to, for example, 150 or maybe even 149.60. Both could be bouncing spots for upside continuation to 151, 20, and maybe higher. We're a bit unlucky because some of these breakout trades have already occurred. We got 6 minutes before the top of the hour, and then we'll take a look at the dollar yen again, the euro dollar, and the pound dollar. Until then, does anyone have a preference for a certain currency? Basically, their pound odd is the same, and euro yen too, because it too had as the pound yen, the euro yen the same as the pound yen, because it too had a tremendous upside, some correction, and could be maybe making some more downside correction. Let's see if that's true. But the pound yen especially could have that, whereas the euro odd and pound odd look like they would be a good breakout trade again to the upside once we maybe just correct a bit more. Or let me say it this way, I would want it to correct a bit more before I can trade it. The Odd New Zealand, same thing, also maybe some small downside, but then a bounce before it's really desirable to trade. Or any questions maybe in the meantime? I forgot to look at the Forex calendar, in fact, which would be a smart idea because we got some news today. Tomorrow we have euro and pound interest rates. Today we have ADP, I know. We had Aussie GDP. Oh, that was the big break, of course, with the 0.6 and 2.3. Yeah, that was a big one. Big negative number there. Oh, we have pound services PMI. Aha. That's something to be aware of. 30 minutes. We have ADP, and then we have CAD interest rate. Anyone use ATR as a stop loss or trail stop loss? Maybe someone has some experience with that. If you do, let us know. It'll be interesting. Personally, I use indeed moving averages, which is also, in a way, some method of incorporating volatility into factoring the stop loss. All right, no questions so far. Well, let's take a look at the euro dollar. Euro dollar indeed getting a bounce. Interesting enough, as Kalen was thinking of. And in this case, the bearish start not really getting a follow-through in this case. So it's not always true. And this particular setup, I didn't necessarily trust the bearish price action because of the trend as well, plus the impulse here. And we are getting a bounce a bit sooner maybe than I was hoping for. I would have liked to see this level, for example. It is also getting rejected indeed, and that's true, Caleb. But that's also showing indeed the difficulty of trading in a kind of a chop whack, or not whack, but I mean wedge as this. Moving averages are not pointed to the upside anymore, though, which means that if you look at that, the angle, it's really diverse. The top is up, the middle is downside, and the lower level is pointing down. So even the moving averages don't know it's quite choppy. And there is a bit of a wick here. So I guess we're still in the waiting mode, or at least I am, because there could be a trend line like this, but the upside potential is limited because of the bigger trend line pretty close by. Despite the small wick, probably looking a bit more bullish, but, well, is it worth trading? I would probably want to see a bit more confirmation. I would like to see this band again pointing to the upside. let's see. There is some upside here. Difficult. It's a border case, if any, if at best. So if the moving averages were to be pointed to the upside, a break above here could be a breakout trade. But we know from higher time frame analysis that there's also a resistance line close by. So I would not be looking for shorting here in that case, no, because it's too bullish for me. But personally, I would be careful. Would probably still, in honesty, I'm still sitting on the sidelines until I get more information. I think that a break above this level would give the confirmation of an upside break. Downside only really if we break probably below blue, because this move up, not really confirming downside, although we didn't break these highs yet, which means that this could have been still retracement. It's too much of a mess, I think. Maybe we'll need to look at the Camarilla indicator to get some idea, because from a technical point of view, there's a lot possible within these two lines. Let me take a look. H3 short at 136.15. Well, that's a bit on the high side, I think. There was a L3 long indeed there. Interesting. L4 short below 135.42. Down to 135. Where's the H4? All the way at 136.40. Interesting. $136.05. It could be worth it. The only thing is that if you see a small bull flag like this on the 15, then I would move it to break even, because then there's probably a high likelihood of this. So that's the only thing I would add. This is the Camarilla indicator, Camarilla pivot point indicator. Pound dollar, long here, short breakout here, H3 short here, and H4 long above the top, which makes sense. Alrighty. Let's take a look at the pound dollar still. Sorry about that. I lost my euro dollar. I don't know why. Did I delete it? Yes, I did. Pound dollar. 15-minute world. It's not getting that bounce I was looking for as yet. It's still moving down. Would really like to see a bounce before attempting that reversal. Let's see if we get that. We did get a second 1 hourly candle below the trend line, so it does look like we have a potential for the pound to make some reversal back to that level. Let's see. Reversals are always tricky to trade, so be careful of that. But it does look like we're getting that scenario on the pound dollar. Breaking this triangle, in fact, to the downside, not to the upside, but the downside break could just be limited to 163.30 or 163.14, for example. Other than that, we're looking at the Aussie. That's still pushing down. We were looking at the dollar yen and saying maybe deeper correction is possible. We did get a engulfing twin at the 61.8, so that would be an important level. If we break above that, it's probably more bullish than I think. If we stay below there, we could maybe make that correction down to 101.50. That's what I would think at the moment. Dollar CAD didn't have much space. The Euro odd looking for bull flag to continue for higher levels. Pound yen, maybe the potential to correct lower. That's about it, I guess, that we were looking at today. Oh, and now New Zealand, of course, for more downside. Is there anything else that we were looking for? Any other 1 hour candles that were supposed to give us guidance? I'm not sure anymore. I don't think so. I think that was it. Your odd is still pushing. If this pound dollar does fall in one shot down to 163.30, then what can you do? It was just a breakout in one go. Then the only chance to catch it was a break here, which, in my opinion, was still a bit early in the day to trade that. But personally, I don't trust pound breakouts that early. But maybe that's just my thing. But I do think it's a lot of volatility. In this case, though, there's a bit of an exception that the pound seems to be breaking nicely early in the day. But we do have a pound announcement anyhow, a news announcement. So let's see how the news announcement forms and shapes this pound dollar. And after the news announcement, maybe there could still be a continuation trade left if this hasn't moved down already in the meantime. Rich, the indicator, I'll take a look at the chat. And I'll get that for you. No problem. Gary, that's the Camarilla pivot point indicator. And if you want that, just send a message and I'll get it to you. Yeah, let's answer some questions. Does anyone have a question? We can take a look at those, as Kaylin is suggesting. By all means, let's take a look at, maybe Tarantula has his forecast somewhere. Let's take a look. Ah, got you, Kaylin. That's funny. Good one. That's true. Does anyone know where this is? Is this Tarantalas? No, this is someone else's. Not that it's not good, but I was just curious about Tarantula specifically because we do webinars together. Yeah, here too, the person is saying, look out for this 136.20 resistance on the euro, pound dollar, strong support, 162.50. Yeah, that's true on the Kiwi. That could be resistance indeed. Cool. Does anyone know where that Tarantula, this is the technical outlook. That was yesterday, in fact. Maybe where can we find, maybe Forex articles. If there are any questions, by all means let me know. Otherwise, I guess we'll wrap it up today. And we'll be back tomorrow, of course, the 5th December. Take a look at what we can expect on the euro and pound with those interest rate days. And then later at evening, Thursday evening, we have the need versus greed. This doesn't seem to be it. I'm not sure where exactly Tarantula has his articles. If you know, let me know. Or maybe it's a trader's blog. Trader's blog is actually from Mario. But this is from yesterday, though. Well, yeah, not sure who it is. I'll have to check with Tarantula. In any case, that'll wrap it up. I don't see any questions. Oh, wait, Kaylin has a link there. Sorry, missed that. Ah, that could be it, but that's going to be tricky for me. Doesn't look like it's daily analysis, though, because this is from the 28th of December 2012. So, but this is probably his introduction, I guess. Ah, cool. This is for, okay, this is indeed it. I'm not sure how you got that, but it's blogs Tarantula FX. Okay, so I remember that. Ah, it's on the traders' blogs? Okay. I need to scroll down. Let me check that. Ah, understand. So this is by Mario by Tarantula FX. I understand. So the December 2 was his last one. And let's see, 135.70. Gotcha. But we got a bounce. In retrospect, we got a bounce in this blue zone indeed. Alrighty. Well, interesting. We can take a look tomorrow if he has anything updated. Good to know. And thanks, Kaylin and Zoran for that. In any case, wish you all great trading and hope to see you tomorrow. Cheers, everyone.
The organ